as always, I'm going to start with where I see the market because people ask that all the time. And okay, so here's my thoughts on the market. And this section will probably go straight to YouTube too. Um, so what are my thoughts on the market? Liquidity. I've been in love with this indicator since I found it. Like I love this thing. It tracks so well with crypto. It's fascinating. And I don't know which one of you guys pointed it out. I don't know if you're here, but one of our great members pointed out that even this sell-off on Bitcoin was kind of being mirrored by liquidity. So this, I don't know if I think you can see it, right? Like if I do this, you can see how even this little sell-off, you can see it here. You can see it right here. And I did notice that little wiggle in the chart. And I thought, nah, there's no way uh, global liquidity or central bank liquidity moved forward by 84 days, which is like voodoo. It's magic. Why 84 days? Why does it work? I did point out that there are some orbits that line up with this specific time frame, and the reason I think it's interesting and weird is because I have seen the same multiples of 84 days work with gold and Bitcoin. I actually have a whole issue written on that, and if you want to know about that, I'll show you here. Now the indicator is not as so gold. Just the TLDR is gold is a forward-looking indicator for where Bitcoin is going to be not in 84 days or 12 weeks, but rather 24 weeks. So it's 24 weeks. And it's a forward looking indicator too. But when I looked into the history of this relationship between the 24-week leading time for gold versus Bitcoin, I noticed that in 2011 and 2012, and going through, I believe it was through 2018, so the first 8 years of Bitcoin trading history. And get this, because this makes no sense. Bitcoin was leading gold. It was leading gold by 12 weeks. So this number, 12 weeks, 24 weeks is a multiple, or as they used to say, a harmonic. GAN, legends like GAN used to say a harmonic. So 24 weeks is a multiple or harmonic of 12. I think GAN wrote a book called The Square of 12, even. He even said that the number 12 is very important. Now, the reason I'm pointing this out is because I don't think it's the conventional explanation is gold is a forward-looking indicator for liquidity because gold traders are super smart and they just know what liquidity is going to do. They know what the central bankers are going to do before the central bankers themselves know what they're going to do. That's how smart gold traders are. That's a conventional explanation. Then you have liquidity, which is like what the central bankers are going to do. And then you have Bitcoin, which trails behind liquidity itself. So you have gold pricing forward liquidity in 12 weeks into the future. Then you have the actual liquidity moving. Let's say that's moment zero. And then moment minus 12 weeks or 3 months. Well, that's Bitcoin reacting to that liquidity. So gold forecasts it, uh, liquidity reacts, and then Bitcoin reacts to liquidity. And so there's this relationship of 6 months between Bitcoin and liquidity, and of course, about 3 months between liquidity and gold. Although that correlation is not super strong. I've tested it. It's not that great, which makes no sense, right? I mean, if gold leads liquidity, sorry, Bitcoin by 24 weeks and liquidity leads by 12 weeks, logic would dictate that gold leads liquidity by 12 weeks. And it kind of does, but not really. If you want, I can waste your time with that today, but it's a waste of time. I looked into it. There's nothing to it. Alex is pointing out that crypto's moving fast. Yeah, man, because it's Jay Powell, but I do want to talk about that. I think that's key because it's crucial because we're going to get a sense of what's going to happen now because notice that this dip on this chart, and I'm going to line them up pretty quickly here. I'm going to line these up, but notice that it was kind of forecasted by liquidity. So we have a high, quote unquote, suggested by liquidity on the 15th of August. We had a high on the 12th, sorry, on the 11th of August. And there's a rule here that this is the first time I get to see it in real time. But when you see a forecast date, a key forecast date like this one, August August 11, and I could show you other examples of this. So you don't have to take my word for anything I'm saying here. But I have noticed that, okay, this is a turning point and it produces a high, and it did. Bitcoin went to 120 and it retreated. That tells you that, okay, that's a potential high. All right. What negates that in my studies is once a day, the 3-day trading rule. So we need 3 consecutive closes above the high on the 11th of August in order to say, okay, that forecast that we had for a high dismissed, because Bitcoin has rallied and stayed above for 3 consecutive days above that high. So it's noise, or it's quite interesting that it's making this high, but it's not an important turning point. Remember, some of these just produce a 1 or 2 day reaction, sometimes a single day reaction. What am I trying to say here? What I'm trying to say is Bitcoin never went for 3 closes above the August 11, 2025 top. And again, sometimes it sounds like I'm just making excuses for not getting the actual high. But no, guys, I've actually seen this many, many times. On top of that, so we have the 11 on the forecasting model. We have the 11th, put it right there. And then we have another forecast for a high, which I totally did not think would matter. But if you look at this rally here between August 4, I think begins on global liquidity. And Alex, my friend, please pay attention to this, because when you ask me what I think is happening, this is what I think is happening, okay? I'm going into it right now. Notice that global liquidity peaks on the 23rd of September. All right. But between these two dates, August 4 and September 23, there's of course this liquidity line goes up and down, but the biggest like down move within that up move, well, we just went through it. It's this one right here from 15th through the 23rd. That's it. That's the biggest. And I honestly, no, I did not think that Bitcoin was going to, that this would like line up with a move in Bitcoin. Not at all. Like I don't understand this relationship yet. It's almost magic, except it works. So if it works, it works. Again, I don't accept the conventional explanation of, oh no, it's just reacting to liquidity. I don't think that's what it is. I can show you some examples of why I don't think that is, because this correlation exists even during times when there's no way for gold to forward price a crash. Like COVID, for example, is a perfect example. So this correlation is weird, and I will say it will not last forever. Why am I saying that? Because this is what I call the modern correlation between central bank liquidity and Bitcoin. It was not like that if you go to 20, and we're gonna go through it here probably, because you may want to know. It was not always this way. So you would see this correlation between liquidity and Bitcoin. There's definitely something to it, and yes, it makes total sense. That liquidity would lead Bitcoin. Bankers debase the currency, hard money assets like Bitcoin go up. That makes perfect sense. I think that correlation will generally always be there, in general. So there will be exceptions. There have been exceptions, but in general, I think that correlation will be, well, it will continue to work for the foreseeable future. But this super tight correlation where every twist and turn in liquidity forecasts a move in Bitcoin, yeah, I don't think that's going to last forever. All right, but that being said, notice that liquidity was pointing to a weak rally between August 4 and September 23 in Bitcoin. And then we have our own forecasting model, my own forecasting model, saying, hey, there's a high potentially here on the 11th. So Bitcoin breaks above that high, it goes to a new all-time closing high. So then I trigger, or the countdown, the 3-day rule countdown triggers. And I know I didn't say this in the Discord. Sorry, maybe I should have. I was very skeptical of this breakup, very skeptical. Not because liquidity was doing this mini dip. It was simply because liquidity itself is telling us to expect a weak rally, but here's Bitcoin making the all-time highs. So unless Bitcoin decouples from liquidity and begins to rally strongly, which is always a possibility, but unless it does that, then that move, that breakout, I'm not buying it. Not buying the breakout. I just don't believe in it. I don't believe we're going for new highs. And so I triggered this. So I was counting 3 days. So okay, we have one close on the 13th of August above the high on the 11th. And then on Thursday, and I remember this because I pulled out my phone. This is when I was getting to Mallorca, and I pulled out my phone. I looked at it and I said, there it is. There's a sell-off. It's lining up with liquidity. So what's happening? Bitcoin here is just was trying to rally against a backdrop of weak liquidity growth. So big rally, weak liquidity growth. And as of this correction here, now they're back in line. So now they're back in line. In other words, the move that took place brings liquidity back in line with, or rather, Bitcoin back in line with liquidity. And now I'm liking the price action as far as what I think is going to happen, which is a whole lot of nothing. I do not think that a big rally is starting now. I don't think, I hope so. I'm hedged here, but I'm still invested. And I have the weakest hedge possible. I have put spreads, which means I bought the 110 puts and I sold the 100K um, puts to make that cheaper. And I'm being tactical about it. I tend to buy during rallies. I just bought more just now before I jumped on this. So I am skeptical of the rally, but I'm still going to allow myself to make some money if I'm completely wrong and Bitcoin just explodes higher, which I hope it does. But I don't think it will. I just don't think it will because why? Liquidity showing weak growth between now and September 23. Now, on the forecasts, we have, and I'll get to your questions, Perry, in just a minute, but the forecasts have a turning point, which is a low, let's be honest. It highlights a low sometime between September 13th and September 20th. So that's the forecast. Now, that's a low. However, if we overlay this, and I did say this on the channel, um, if we overlay liquidity on top of the forecast, we get that September is more likely to be a high than a low, or at least one of the dates is more likely to be a high than a low. Because remember, we have two dates, September 13th and September 20th. Maybe Bitcoin begins to rally. It falls into the 13th. I mean, again, I don't think we can use liquidity that way, but there's a bit of a dip there with liquidity. So maybe it begins to rally, then it begins to fall, then it makes a low on the 13th, and then it rallies into a high on the 20th. Now, the reason I think the high is going to be closer to the 20th than the 23rd is because I looked back, and usually it's the forecasting model that pinpoints the actual turning point rather than global liquidity. Global liquidity and Bitcoin can be a little more off or tend to be off a few days more often than my forecasting model. However, I mean, which is, splitting hairs, I think is a term. Like it doesn't matter. It's got to be the 23rd or the 20th. It doesn't have to be on either of those dates. I could be on the 18th. I could be on the 26th, and I would still consider it a success, a remarkable forecast. It was made back in August, and now here we are. Now, what's going to happen then? This is why I don't know that the rally has legs. I don't know why Bitcoin's rallying, but we all know Jay Powell's giving a speech, Jackson Hole. I'm guessing he's going to sound dovish, and the market wants to think that he's going to cut rates. That's what the market wants to believe. I'm not sure he's saying that, but that's what the market wants to think, and so it's primed. It was primed for a rally, anyways. Why is it primed for a rally? Well, the reason it was primed for a sell-off last week. Why is it primed for it? Because of liquidity. So liquidity shows modest growth. Bitcoin tried to go for a strong breakout. That's not modest. That's a strong breakout. So it failed. But then it tried to go for a strong sell-off. But that also contradicts liquidity. So now it's rallying. So you see it's just falling in line with liquidity. It's just following liquidity, literally following liquidity. I am every bit as confident that it's not going to crash as I am confident that it's not going to break out. It will stay put. And we all know the next time it goes to 120, people are going to sell. Like they are going to sell. I might be among those people. Um, and I might break the rule because I don't want to give trade recommendations. I just want to move away from trade recommendations. I want to give you guys tools, information. I want to share with you what I'm doing. I think that's far more honest than saying, oh, do this, do that. Alex, you know very well, my friend, that's super hard constraining. You can't trade the way I trade, so you can't follow what I do. You don't trade options probably, or not the way I trade options. You're not hedged. You don't have income strategies that can cushion. Like I can pay for these puts by just doing yield farming, by levering up my Bitcoin position. Can you do that? No. Then if you can't do that, then maybe you can't afford to hedge because they're too expensive right now. Those hedges are pretty pricey. So you can't trade the way I trade, but you can kind of follow my train of thought and make the strategies that I teach your own. I want to do more of that. So I might actually share with you when we're reaching the end of September and Jay Powell has to make his rate cut announcement, which I think will just disappoint the market. It will disappoint the market, and that sets us up for the next 80-day cycle sell-off on October. By the way, My friend Alex, I think you'll appreciate me saying that's part of the reason I'm opening a hedge fund with this guy. Alex is my partner in the hedge fund. I'm opening that because that's the only way to deliver. It's either education and you learn to do it yourself, or we handle the money. There's just no other way. It's just alerts and whatever. They don't. It's not that they don't work. They do, but you can't just follow what I do unless I'm doing it. Anyways, that's enough of that. So, big rally on hopes of a Fed cut. Liquidity is telling us an 80-day cycle high somewhere around the time that that the Fed has to make a rate hike, a rate decision. I wonder what happens. I mean, listen, we have not seen divergence between liquidity and Bitcoin so far in this bull market outside of two very specific events. Number one, ETF approval date. They diverged. Liquidity went down, Bitcoin went up. That's one. Two, failed Trump assassination attempt. So those 2 weeks between the failed assassination attempt and the speech that took place late July, that's the only time we saw liquidity go down and Bitcoin go up. So unless we have a strong catalyst in the second half of December for Bitcoin to buck the trend of liquidity and continue to rally, I will say that's it. It's gonna stay contained here, Bitcoin that is. And then when the Fed has to make their decision, Jay Powell disappoints once again. And I honestly don't think he should be cutting. Like inflation is going up, the U.S. government is running too high deficits anyway. He shouldn't be cutting. There's a lot of reasons not to cut, and financial conditions are pretty loose right now, as evidenced by the stock market being at all-time highs. I know it's more of a political statement, and you can point to pockets of the economy that are weak and could require a cut. I think credit card debt, whatever, that type of stuff. Like the consumer is hurting in the States. I get that, but if you look at it broadly, should he be cutting right now? I don't think so. The dollar is super weak too. Like it went way down. So I don't know that he should be cutting. So that's where I see things. Where I see things is okay, we're just following liquidity here. We're not getting the breakout because liquidity is not breaking out. So if you see Bitcoin break out to the upside, fade it. If you see it breaking down to the downside, fade it. It's just gonna stay contained in range. Why am I hedged? You might ask, if I don't think that Bitcoin's going to break down. Well, because I have to. I run an automated strategy. And the automated strategy has me hedged whenever Bitcoin breaks below the 80-day cycle VTL. I think we discussed it in the last AMA. So if we're trading below the AMA, I'm hedging, period. I don't care what my opinion is. Now, this is personally how I do things, is if I know I have to hedge, like I have to hedge because Bitcoin is below the VTL, but I don't think there's a lot of downside, what I do is I buy cheap hedges and I trade around them a lot. And if I see that Bitcoin is really not going to crash, I start selling back those hedges. I just start unloading them. That's how I do it. Because there was a trader that I used to follow years ago. One of his favorite sayings was discipline before conviction. He would always say that, discipline before conviction. So based on my research and the way I like to trade, whenever Bitcoin trades below the 80-day cycle VTL, I talked about it last in August. Sorry, we're in August now, in July. So last AMA, I talked about the same thing. And if Bitcoin breaks the VTL, listen, it's like a weather forecast, right? Like it's not going to be sunny outside. It's not going to break out. It's not going to do well. And there's a chance for rain. There's a chance we get a crash. It could happen. And so the best thing is to be hedged, but a weak hedge, you don't wanna be selling. You don't want to be having just naked long puts. Put spreads is where I land as being the best possible strategy. Now I did have some 119 puts in August expiration, which is next week. I did sell that Bitcoin because the puts were in the money. So I just sold and I bought a $120, 120K call, September expiration. So in that case, if the hedge goes in the money, I'll sell. But I buy a call as a hedge against being wrong on that front. So I hope I'm making sense. So anyways, that is the outlook. Probably going to see more strength as we head into Fed week. And then once we hit Fed week, it goes down from there. Which leads us to the next key point is what happens next. Well, let's see what happens next. So liquidity is doing okay here. We have a low in October, which I highlighted also here. Let me delete some of these. We have this low in October. I think it's the 23rd also. Yeah, it's the 23rd. And we do have a strong low forecast for the 17th. So, yeah, to be fair, okay, between the 17th of October and the 23rd, that's when the next 80-day cycle low might be. Now, the key here, and one of the biggest takeaways for me today that I want you to take home with you is, what is this? Oh, never mind. So one of the key takeaways here is, okay, what's going to happen next with liquidity? Because right now it's doing okay. When I started tracking this indicator, we were like, I think we were here. So we could see, quote, see all the way through to October 30th. October 30th, 2025. From there, liquidity was just, again, just rallying from the October low, but not doing much. Then it started to dip. And I was like, okay, no, that's not good. We shouldn't see that. Liquidity needs to go up because that's what tells us that the bull market continues. If liquidity falls here and it makes new lows, then we're looking at September 20th being the bull market top potentially, or at least the high of the year. Why? Because there's not enough time. There's not enough time for Bitcoin to recover by the end of the year. So hope we don't see that. If we see a rally and we see liquidity break above the September top, then probably not going to sell at that point. I might still do it. So what I would do is around September 20th, I would sell all my Bitcoin and buy 120 calls through October expiration. And if you see Bitcoin dip, you sell those calls and you try to nail this low. That's how I'm trying to play this. I'm not sure I'm going to do it with all my whole stash. I don't know. I haven't made it my decision yet, but that's what I'm watching. And I think the key here, there's two keys. One is liquidity going to break to new highs? And the other one, and I'll wrap after this and I'll get to your questions, but the other one is gold. Gold is trapped in a range. You can see doing pretty well here. And let's get rid of liquidity. So as I said, gold is a leading indicator for Bitcoin, but 6 months. Suffice to say, so far gold has a key top here in April. 6 months from there is November. So that points to a November high. But the thing is, gold hasn't crashed. So since making the high in April, gold has flatlined. It's done nothing. And so if gold breaks out to new highs, what is this telling us? It's telling us that the bull market goes into 2026 because gold so far has stopped for like, well, let's see here. So all the way, it's still stopped here in September. Sorry, no, let's go to September already. And if we add 3 months, I mean, that takes us to what, March? So it would point to maybe a consolidation period between November and March, and then Bitcoin would make new highs after that. Again, this gold correlation isn't as strong as global liquidity itself, but it's still pretty strong. And so if gold breaks out to the upside, that tells us that the bull market might continue into 2026. If we go back to Bitcoin and liquidity, which is a much stronger correlation, if we see liquidity break out to the upside, well, that's bullish too. So I want to see both. I want to see liquidity break to new highs, and I want to see gold break to new highs. If we see those two, then at this point in the year, we can say that the bull market continues into 2026, which it would be great. It would be great to see. And has that happened before? No, that would be the longest bull market probably in crypto history. But then again, this has also been the weakest market in crypto history. And don't even get me started on the altcoins. Most of them are dead. And so, well, Ethereum woke up, and I hope we can cover that also here. But this is an AMA, so I'm just going to get to your questions now.